Have you reported your capital losses? Hi, I'm Kimberly Shapcott, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. Capital losses, what are they? Where do they come from? What can you do with them? Well, a capital loss will arise when you have bought something for, let's say, £200, but when you come to sell it, for whatever reason, it's only worth £100. So now you've got a capital loss. Because when we take the sales proceeds of £100, take off what we paid for it of £200, we've got a £100 loss. Now this can be anything from, it can be stocks and shares, it can be property, it could be cryptocurrency. There's quite a few different places where this may fit in. And the key thing that this video is really talking about is making sure we log those capital losses with HM Revenue and Customs. Now you might kind of say, why would I really? It's a loss, I don't need to worry about it, I'll use it in the future. Which, yes, you can definitely use it in the future, and we'll cover that in a moment. But if you don't actually log it with HMRC, then as far as they're concerned, it doesn't exist and it cannot be logged. Another question I get asked regularly is, but I don't have to do a tax return. I've made a loss, I don't need to report anything. Which I agree, you've made a loss, you don't have to report a gain, you don't need to do a tax return. But there are steps you need to take if you have made a capital loss to make sure it is available for you in the future at some point. So hopefully you can understand where a loss comes from. So for a property example, you may have bought a property for $125,000. There's been a bit of a market crash, or in the area you've invested things have gone down, or it could just have deteriorated the property, which means actually you don't want to spend the money to do the property up, and now that property is worth $100,000. So now we've got $125,000 purchase price, $100,000 sales price, we've got a loss of $25,000, which for that example is a considerable amount of loss. But you might have some other properties that in the future you are expecting to get a decent gain on. So you want to make sure that that loss that you've made has been logged with HM Revenue and Customs to ensure that when you do have the gain, you are not going to be paying as much tax. So that leads me nicely on to what happens with this loss. Well, as soon as you've logged the loss with HMRC, you will then have told them that you've got this loss. So for our $25,000, that sits there with HMRC forever as a capital loss that you've got on file. So you need to keep a record of it, and it will also be logged with HMRC. So in the future, when you do make a gain, what will happen is you'll calculate your gain and then you'll take your loss off before you actually calculate how much tax is payable on capital gains tax. So this is a great way, especially if you've got maybe a loss that unfortunately is just one of those things that the property didn't work or whatever investment didn't work out for you. But hopefully with the ones that do, it will help reduce any capital gains tax in the future. Now, one question I probably get asked every so often is, but I don't need to use it now, I'm not selling anything, what about the future? I'll deal with it when I come to make a gain. And that's all very well, apart from you have to log these losses with HM Revenue and Customs within 4 years of the loss. So if you're not going to make a gain for another 5-10 years, then you're going to lose that loss and not be able to use it when you have it in the future. Therefore, you need to make sure you log that loss with HMRC at the earliest possible stage. And we'll cover how you go about doing that in a moment. There is one exception, that if you do have losses that occurred before the 5th of April 1996, then you'll probably still be able to use those losses. But again, you will need to have the evidence, you will need to have the documentation to show what those losses are so that you've got the evidence if there's any questions. And those losses will get deducted after any more recent losses, and they're kind of the final losses that you use in any calculations. So that's just the one oddity in the system. So that kind of nicely leads me on to what you need to do to log the losses. Now, if you do a tax return, that process is arguably relatively straightforward because you just report it on your tax return in the capital gains section and you show that you've made a loss on the property and it gets logged that way. Obviously, you can then use those losses in the current year on a capital gains tax return if you need to, and you can also use those when appropriate in a future year now that they are logged through your tax return. The bigger question that is out there is probably what happens if you don't need to do a tax return. You've made a loss, you don't need to do a capital gains tax return, so you're not logging them that way. You've made a loss, so you don't need to report it on a personal tax return, so you don't need to log it that way. But you've only got 4 years to actually let HMRC know that you've got that loss, so it's logged with them, so you can use it in a year or 20 years time, depending what happens with any other capital items in your life. The answer is therefore you need to write them, and there is a specific address to write to, which I'll include in the comments box with a link to where you can find that out, as it does change every so often, but hopefully that will get you to the right place. The key thing here is that you do write them. Keep a copy of that letter. I cannot confirm if they will acknowledge the letter or not, because at the time of recording this video, the response time was between 3 to 6 months at times, depending what department of HMRC things are going to. So I'm not going to guarantee that you will get any sort of response. You may do, depending how their post systems are working at the time you send the letter. But the key thing is you send the letter to them, and you also keep a copy. So you've got your evidence to say that this was sent to you on this date, and therefore that has been logged with them at that point in time. I tend to recommend that this is done after you've made the disposal of the property or the asset or whatever it is, or potentially just after the end of that tax year, to make sure you've got it logged and it is very clear. The specific time frame that you have got is 4 years after the end of the tax year that it kicks into. So our tax year is from the 6th of April to the 5th of April. So in the tax year it happens, you don't have to do it straight away, but after that tax year ends, you've only got 4 years to actually do it. So if we did it in May 2024, then we're in the 24-25 tax year, so we've got till the 5th of April 2025. Add 4 years onto that, so we need to report that by the 5th of April 2029. So as you can see, there's a lot of time there to do it, but if you don't do it within that time, they may be lost, and if it's considerable sums of money, then that's quite significant if you are going to be getting any gains in the future. As you can see, it's quite a simple process that you need to follow to make sure that you've logged your losses. The key things I'd recommend putting in the letter are your name, address, your national insurance number if you don't have a tax reference, to make sure that they can connect the dots with your tax account. If you have been self-employed or registered with HMRC, you should have your unique tax reference, which is a 10-digit number that they'll be able to identify you with. In that letter, I would just literally state what the loss is, how the loss has arisen. So for example, if it's a property, you'd let them know that a property at the address, full address, has been sold. It was purchased for X amount, 125,000. It's been sold at 100,000, which has created a loss of 25,000, which you would like to report and log onto your file for future use when a gain arises, which then in essence is telling them exactly who you are, what has happened, what loss that you are going to be writing about, so that they can log that onto your account. This can be done by yourselves, or if you do work with an accountant will be able to assist with this side of things as well. If you have any losses that you haven't logged with HMRC, get writing and get them over to HMRC so that you have got some losses allowable to be used in the future against the gains on those property profits that you are hopefully going to be making. Hopefully today you've figured out what you need to do to make sure any capital losses that you have incurred are recorded with HMRC. Please like the video and do subscribe to the channel. And let's make tax less taxing.